Hello everyone, I am Sanya Chauhan from Standard 10B and I am here to express my views on the topic money and credit. The topics which we'll discuss in this presentation are as follows. First, the evolution of money, functions of money, sources of credit, and the role of Reserve Bank of India. Before any further discussion, first let us know about what money is. Money is the medium of exchange. Money is used as a medium of exchange in the form of currency or checks. It is used to pay for goods and services. The use of money as a medium of exchange promotes economic efficiency by minimizing transaction cost, which is the time spent in exchanging goods and services. Now we'll talk about the evolution of money, how money was evolved. The first step in the evolution of money was barter system. In ancient time, before money was invented, people exchanged goods directly for other goods. This way of carrying out exchange is called barter. But there was a drawback also in the barter system. The drawback of barter system was double coincidence of wants. For example, take a case of a woman who wants to sell her chicken and buy shoes. But the difficulty is that she has to search for a person who can buy chicken for his shoes. Because both parties have to agree to sell and buy each other commodities. This is known as double coincidence of wants. This is a very time-taking work and difficult. The next step in the evolution was the discovery of precious metals like gold, silver, copper. Metallic money consists of coins made of gold, silver, copper or nickel as a model of payment. Here are some pictures of metallic money which was used in ancient times and they are issued by the different kings. Metallic money can be fully voided, whose face value is equal to the value of metal contained in it. Token money. Its face value is higher than intrinsic value, the value of metal. Token money is the money which we are using nowadays. Here are some pictures of token money. Now, paper money. Paper money refers to the notes issued by the state or by the bank, usually the central bank of the country. Paper money can be representative money, convertible paper money, fiat paper money. Cryptocurrency. What is cryptocurrency? Cryptocurrency is a digital currency that uses cryptography for security and anti-counterfeiting measures. The first cryptocurrency to be created was Bitcoin in 2009. The value of cryptocurrency is not tied to any country or central bank. The value is only driven by supply and demand. Credit money. Credit money includes bank money, different instruments offered by the banks. Checks, drafts, etc. are examples. Convenient, safe and easily convertible into cash. It is like near money. Electronic money. Electronic money, also known as e-money, electronic cash, electronic currency, digital money, digital cash or digital currency, refers to the money or script which is exchanged only electronically. Typically, this involves use of computer networks, the internet and the digital stored value system. Now we'll talk about our second topic, which is the function of money. There are two functions of money, primary function and secondary function. Primary function is medium of exchange and measure of value, and the secondary function is standard of deferred payment, store of value. Primary functions of money, medium of exchange. The fundamental role of money is to serve as a medium of exchange. The consumer can purchase any commodity or service with the help of money. Second, the measure of value. The value of all goods and services is expressed in terms of money. It help to compare the value of all commodities. Every country has a standard money or a monetary unit in terms of which values are expressed and measured, which is known as currency, such as dollar, pounds, yen, etc. Now, the secondary functions of money. Standard of deferred payment. Future payments are termed as deferred payments. Deferred payments are possible only because of money. Money makes possible the credit transaction to happen. Money acts as a standard of deferred payment. Secondly, store of value. Money works as a store of value along with satisfaction of present wants. Provisions of futures want is actually important. It serves as a store of value because money has purchasing power. Types and sources of credit. Now, before we go for a sources of credit, let us first know about what credit is. What is credit? Credit means someone is willing to loan you money, called principal, in exchange for your promise to repay it, usually with interest. Now, what is interest? Interest is the amount you pay to use someone else's money. The higher the interest rate, the higher the total amount you pay to buy something on credit. Now, sources of credit. In India, there are two sources of credit: informal sources and formal sources. Informal sources contains non-government sources such as family, friends, moneylenders, traders, etc. And formal sources contain government-owned institutions such as commercial bank, regional rural bank, etc. As we know that major portions of the deposited money is provided to those people who are needy of money for the economic activities. In India, Reserve Bank of India is supervise the functioning of loan activities in the formal sectors. In India, the rate of interest in informal sector is greater than the rate of interest in formal sector. Rate of interest in formal sector is supervised by legal authority. Now, what happens in the informal sector? In the informal sector, the rate of interest is supervised by the moneylenders, traders, employers who are provided money. The rate of interest is varying from person to person. There is no organization for supervising loan in informal sector. Lenders can use any method to get back their money from the borrowers. Sometimes the incomes of the borrowers become less compared than the amount which has to pay due to the high rate of interest. Now the last topic, role and functions of RBI, which is Reserve Bank. The monetary functions of the Reserve Bank of India. Reserve Bank of India is main monetary authority of the country. It formulates, implements and monitors the monetary policy as well as it has to ensure an adequate flow of credit to productive sector. RBI is the issuer of currency. RBI design, printing and distribution of currency. The bank issue and exchanges or destroys currency and coins not fit for circulation. The goal of ensuring the adequate supply of clean and genuine notes. RBI is also a manager of foreign exchange. It acts as a custodian and manages the Foreign Exchange Management Act. RBI buys and sells foreign currency to maintain the exchange rate of Indian rupees versus foreign currencies like US dollar, euro, pound and Japanese yen. RBI also controls the credit. Credit control is a major weapon of the RBI used to control demand and supply of money in the economy. Now, one of the non-monetary function of RBI is to regulatory and supervisory. The RBI Act and the Banking Act have both conferred extensive powers of regulation and supervisions to the RBI over commercial and cooperative banks to check malpractices and protect interests of the investors. Now, at last, I want to say a famous quote said by Nelson Mandela. Money won't create success, the freedom to make it will. Thank you.